Good morning, everybody. Welcome to Money Talks with Attorney Coral. I am Attorney Coral Pleas, the host of the show, and thank you so much for tuning in every week. It's funny because I'll be at the bank or now even places around town, and people will say, "Oh, I listened to the Money Talk show with Attorney Coral." So I just want to say an extra special thank you for everyone who tunes in support of the show because it's sponsored by Columbia Savings and Loan as a assistance to the community, just to give out helpful information for people in terms of estate planning or in terms of credit matters, which is one of the things that we're going to talk about today. So, but before I get to any of that, I just would like to say last week, Columbia Savings and Loan Association turned 100 years old. A week ago today, I had two of the members of the board of directors from Columbia in the studio. I had Dr. Mose Fuller and Mr. Steve Moore that talked about Columbia and the history of the bank and the present status of the bank and what we hope for the future of this bank. And we have a solid team that's working so hard to make sure that this institution, this historical institution, continues to prosper. So, shout out again to Columbia for turning 100. But in addition to that, I would like to remind everyone we will be celebrating the centennial anniversary of Columbia Savings and Loan on October 24th. 2024. So, just in a few short weeks at 6 p.m. at the Trade. If you are interested in buying tickets to attend that event, the tickets are $100 per person, but you can reach out to Columbia Savings and Loan at 414-374-0486. Ask for Danielle. If you would like to reserve tickets, call the bank, ask for Danielle, and she can put you on the list. There's going to be limited seats available, so if you'd like to come to this event, please call now. The number again is 414-374-0486. That will be October 24th, 2024, 6 p.m. at the Trade in downtown Milwaukee. I'll announce it again before we wrap the show for today. So, okay. I'm always getting a lot of calls, a lot of requests to talk about credit. And I started talking about this a few weeks ago, and then we had other guests because I also have an ongoing series where I invite entrepreneurs or other community leaders onto the show to talk about money related matters, business related matters. But today I'm going to circle back and talk about credit again. Some of it will be review, but I hope to maybe get through the full presentation today. I always get cut short on this one and end up having a lot to carry over. So I'm going to quickly go through some of the information for review, and I will invite callers with questions. The number here is 414-444-5250. That is 414-444-5250. And I think the other number, Jermaine, 5253. All right, Jermaine's got me. One day I'm gonna finally remember all the phone numbers, and then they'll probably change. That's how that goes. Um, all right, so this information about credit is informational only. This is not legal advice that I'm giving. It's just some research that I've done that I am happy to share with the audience. And if there's other people that would like to call in, maybe you have some information to add to the discussion. And so that's why I invite the calls. Okay. So the question, what is credit? Credit is the trust that allows one party to provide money or resources to another party. So that's a real basic explanation, but I like to start with just the basics so that people understand what it is we're doing and what it is we're speaking of. So in particular, what we talked about before was a credit score, right? A credit score is a three-digit number, typically between the numbers of 300 to 850, that is designed to represent your credit risk on the likelihood, or excuse me, the likelihood that you'll pay your bills on time. Creditors look at your credit score as a factor when they're deciding to whether or not to approve you for a new loan. What is a good credit score? We spent a little time on this before, but let me just review. Okay. A credit score between the numbers of 300 and 579 is considered a poor credit score. Credit score between 580 and 669 is considered a fair credit score. Credit between 670 and 739 is considered a good credit score. Credit between the numbers of 740 and 799 is considered a very good credit score. And if you've got 800 plus, 800 to 850, you have excellent credit. Okay. Now you'll find if you Google what is a good credit score, there's other measurers that will maybe move those numbers a little bit, but that those are generalizations, but that's pretty much what I found in terms of research in terms of what is considered a good credit score. And the national average, so the average of all people, all adults in the United States, the average national credit score is 695. So if you look at the ranges that I just gave, that would be considered a good credit score because good starts at 670. The national average is 695. So it's a good idea to pull your own credit score so that you can know where you are, and know if there's some work you need to do to improve your credit score, or maybe you're solid and you just it's a matter of maintaining and keeping a good score on your record. We'll talk a little bit more before the break about how you can pull your credit score for free. So that information will be coming up before we um, go to the next segment, or if I don't get to it before then, it'll be the first thing I tell you when we come back. Um, you may have heard of FICO scores, and that stands for the Fair Isaac Corporation Company. And that company developed a credit scoring model, which is used in over 90% of lending decisions in the United States. Now, forgive me, guys, if I'm talking faster than normal, it's because I really want to get to the point where I actually can get through the presentation. And what I'm talking about now is actually review from the last time, and maybe some of the listeners recall some of this information, but I'm pushing a little bit because I want to actually get to the part that I always run out of time before I get to. So that's why I'm talking a little fast. If I'm talking a little too fast, you can call me and tell me, or tell Jermaine. You can call us at 414-444-5250. That's 414-444-5250 or 5253. Back to FICO. Okay, you'll hear me use the terms FICO scores and credit scores interchangeably. If you've ever applied for a credit card or a car loan, mortgage, or other type of credit, there's a good chance the lender used your FICO scores to help them decide whether to approve credit, and what terms or rates for you to qualify you for. And it looks like I have a caller that's holding. Caller, please go ahead. Good morning, caller.
Yeah, I have a question about uh, credit scores. You have the credit score, but then there's a FICO score. What's the difference?
Yeah, they are. I was just saying that I tend to use those interchangeably, because it pretty much means the same thing. But FICO is an abbreviation for a company that kind of developed a scoring model that is used in most of the credit decisions that are made in the country. And when I get a little further into the show, I'll talk about how specifically in FICO they break down that credit score in terms of what percentage they look at in terms of your payment history or accounts that you have open. FICO just developed a model basically to say 30% of your score is based on this. 20% of your score is based on another factor. So I'll talk a little bit more specifically about what that is, but I do use the terms interchangeably because it's pretty much the same thing. FICO also has other scoring models that they'll create, like a specific one for auto industry, or a specific one for other types of industries. So they do have more detailed and specific examples, but it's pretty much the same thing.
So the common denominator is the credit score.
That is correct.
And you're going to talk about the three bodies that people can get those from, and what's the difference between the three of them?
Yes, I am going to talk a little bit about the three main credit bureaus that collect. I'll Experian, Equifax, and TransUnion. Those are the general three. Again, there's a couple other smaller ones that are out there, but those are the main three. And I'll speak on that a little bit as well.
All right, thank you.
Thank you so much. Thanks for calling. Okay, so we were saying that FICO periodically updates its different scoring models to be industry specific. And I mentioned, for instance, the auto lending industry or even the credit card industry. So FICO will come up with different models sometimes for different industries. But for today, just to keep it simple, we're talking about the 3-digit credit scores, the ranges that I just read off, that 300 to 850. And I'm going to use that interchangeably. So that was an excellent question because that's exactly what we're talking about here today. So most people are aware of the 3-digit credit scoring system from the three main credit bureaus that the caller just mentioned. Those three, Experian is one, Equifax and TransUnion is the other. Um, each calculates a score based upon the information that's on your credit report. And they are very similar, right? The three in terms of how they operate. And what I know in terms of differences sometimes between them, you may have a creditor that only reports, let's say, for instance, to TransUnion, and they don't report to Experian and to Equifax. You may have a creditor that reports to all three. Um, my personal preference is if a creditor reports to all three, because then you can have consistency across the board with your scores. If sometimes you have a situation where there's a creditor that only reports to one or doesn't report to the other two, it can help you or hurt you based upon whether or not that's good credit that's being reported. So it looks like we have another caller that is calling in today. I appreciate the call. So thank you so much. That's how I know people are listening, and I appreciate the support of the show. So, caller, if you would like to. Yeah, is that someone that wants to come on the air, Jermaine? Okay. Yep. Caller, please go ahead with your call.
Good morning, Attorney Cora. Tyrone W. speaking. Good
Oh,
morning.
good morning, Tyrone. I should recognize the number by now. Thank you for calling. Appreciate your call.
Good morning, Mr. Carvey. Good morning, Mr. Rideout. And good morning, Milwaukee. Or good afternoon. Morning or afternoon yet? Morning still yet.
Morning
Okay.
still.
Morning,
Yeah.
morning. Okay. Well, I brainstorming and thought for another show because I don't have much on credit right now.
Mm-hmm.
But I guess if you can, maybe at a later date there, maybe my question is twofold actually. It's nonprofits. Once the original principal, the money has been taken in, and the interest starts rolling in. Is there anything, and this may be pertaining to the bank as well as the attorney professionalism of it there, so you may have to just kind of let it sit and marinate for another show. But when does the interest kick in and the nonprofit become, what's binding saying that money can be used any kind of way or, back to the original, so once the nonprofit, aspect of it has been initiated, then the interest starts rolling in. What do they do with that money there? Is it still nonprofit interest, or can they just willy nilly? It's the interest. It's the interest. I spend it the way I want to. Chicken, pizza, red wine. Party, whatever. So.
Chicken, pizza, red wine, party. I got you.
yeah, and then the other one would be probably for a later date. The bank. Do they pay their self interest? And, with all the money that they have, do they pay their self interest? And how do they divvy up and allocate the money that they make off their interest? So say hi to sister and family members and have a great, wonderful day, sunshine, blue skies, and a weekend. And prayers to all the people that's recovering and repairing down with the storm and all. Prayers and best wishes to them. and have a great day, wonderful weekend. So just food for thought, maybe something for future shows there. But yeah, the nonprofit, and then do banks pay themselves interest? Love you. Thank you. Have a great day.
Thank you. Thank you so much for calling. I appreciate that. And these would be good ideas for future shows coming up. I think I could answer probably the second prong of this. I don't know so much about the first, but what I'll do is I'm going to make a note, Tyrone, again, and thank you for that, for future shows, and I'll bring in the people that have the best expertise that can address these types of questions. So I thank you for that, because I'm always looking for good show ideas. So yeah, keep them coming. And Tyrone, if you ever want to call or text the law firm or even the bank, either of those numbers, let me give the bank number again, because that's where I usually am, at 414-374-0486. You could always even call and, whatever ideas that you have. I'm so interested to hear from the listeners in terms of what you'd like for me to talk about. So I made some notes here, Tyrone, at your recommendations, and I'll see who I need to bring in that can address these questions thoroughly. So I appreciate that. Thank you so much for calling in with that. Okay, so we were talking a little bit about Experian, Equifax, and TransUnion. They operate the same way, but again, you'll find that certain creditors will report to all three of the credit bureaus, and there are some that may only report to two or maybe only report to one. And I was saying that can be a good thing, or that can be not such a good thing, depending upon your preference. If it's good credit, you want it reported, right? Because that'll boost your score across the board. Because you want consistency between the three credit bureaus. If you have good credit, you want to show it across the board. So let me give you an example, okay? And I talk about this, I think, every time this comes up, because it was a source of annoyance to me when I pulled my own credit report and I found that I had a credit card that I canceled, right? So you got to be careful about canceling credit cards. I did this when I didn't know any better. It was all paid off. It was paid as agreed, on time, every month. And Experian had it on my report. Equifax had it on my report, but TransUnion had it on for a time, and then they dropped it off. They considered it old. Well, that's just it. In the grand scheme of credit, having old credit helps to boost your score. It's harder if you're showing new accounts, because then you haven't been battle tested, so to speak, right? With your credit. So if your accounts are all new or newer, that will not promote a high score as much as old credit. Because if you can have old credit, then they'll look at that and say, oh, okay, yep, this person has a history of having good credit and a history of having good payments. And I tried all that I could. I did everything but a handstand with TransUnion to try to get them to add that account back onto my credit. They don't normally get requests like that. When they get requests, they're normally people that are disputing that maybe there's some bad credit, and the person wants them to take things off. So they didn't even know what to do. They didn't know where to begin with my request, which was to put it back on there. But ultimately, it didn't happen. So I just had to kind of live with the fact that I had a strong credit history of paying an account in a timely manner that got wiped off. It got deleted from my report. So I had no choice but just to, build that back up. Okay. So that's something that's important to keep in mind. So I did want to just say that. So before I go any further, I want to talk about how you can get a copy of your own credit report for free, right? Free of charge. You can go to www.annualcreditreport.com. That is www.annualcreditreport.com. Once a year, you can go to that site and you can get a free copy of your credit report. If you can't go online to look that up, then you can call 1-877-322-8228. That is 1-877-322-8228. in order to get a free copy of your credit report from all three of the credit bureaus. Why should you do that? Well, because you have to know what your credit score is in order to manage your credit score. I know, like, sometimes if you think you're frustrated, you think maybe your score is low and you just don't want to think about it. You want to stick your head in a hole and just pretend that it's not out there. Don't do that. I know, like, that nobody wants to deal with the problem, right? But the only way you're going to fix it is if you pull that credit report, see where you are, and then I'm going to talk towards the end of the show about some things that you can do that can help to boost your credit score, to clean up the credit score. There are some things that you can do. So, yeah, someone said, why is it so, easy to ruin your credit and end up with bad credit, and yet it is so difficult to restore the credit? It's not that it's so difficult, but sometimes it can take time. Over time, credit can improve, but you just have to start making, good decisions, right decisions on a regular basis. So I think we're coming up on that time where it's time to take a break. When we come back, I'm going to talk about the 5 key ingredients that your FICO scores consider. That goes to the first caller that called in. It'll be a little more detailed response to his question. Thank you so much. It's Money Talks with Attorney Coral. We'll be back after the break. Thank you and welcome back to Money Talks with Attorney Coral. And today we are talking about credit scores, and we're going to get to the segment where I talk about how to improve the credit score. But right now, we're going to talk about the 5 key ingredients that your FICO scores consider. How do they come up with a FICO score or credit score? Okay, 5 different things. The biggest percentage, 35% of your credit score, is based on your payment history. I was having a conversation with the president of the bank before I came on the air this morning, and we were just stressing the importance of paying your bills on time as relates to your credit. Now, one of the most significant bills that you need to pay in a timely manner is your mortgage payment. And if that doesn't happen, 30 days goes by and the mortgage payment isn't made, it is automatically then reported to one of the credit bureaus, if not all of the credit bureaus. And that's a hard hit against your credit. That is the biggest factor that is looked at when credit scores are being analyzed. And paying a mortgage late or missing a mortgage payment altogether is one of the worst things that you can do because it so negatively impacts your credit score. So be mindful of that. 35% of your credit score is based on payment history. I cannot stress how important it is to pay that mortgage payment and pay it in a timely manner each and every month. You got to do that. Otherwise, the credit takes a hit, and you talk about a long time rebuilding something to fix that. Yeah, that'll stay with you for quite a while. So be mindful of that payment history and pay all of your bills on time, but particularly the mortgage payment. That's critical. Okay. 30% of that FICO score, they're looking at the amount of debt that you have. So be mindful of that too. You don't want to be too heavy in terms of who you owe. So know that that's something that's considered. If there's a lot of debt out there, be mindful that's 30% of the credit score. 15% of the credit score is the length of your credit history. Now, that's kind of what I was alluding to earlier when I said, I had a credit card account that was old. I mean, it had to be like from the early 2000s, right? So we're talking about a 20-year credit card that was paid in a timely manner. But when TransUnion dropped it off my report, my score took a dip. 15%, they're looking at the length of your credit history. So if you have an old account that's on your credit that you've been paying, think twice before you cancel those accounts, right? Because it can come back negatively impacting you because it can make it look as though your credit history is newer or shorter than it really is. So just be mindful of that. 10% of your score is your new credit, and the other 10% is the credit mix. I'll talk a little bit more about what that means as we move forward. Credit mix, just real quickly though, it's the different types of credit that you may have. So let's say you may have some sort of loan that is an installment loan. A good example of that is like an auto loan, right? Because that can be considered an installment loan. Mortgages are technically also installment loans because you're making payments over time and every month you pay, and in a timely manner that the balance that is owed begins to drop. But mortgages are generally looked at in a category all of their own because they're typically the larger debt and they're so very important. Credit cards are another type of debt, but it's different from an installment loan. So that gives you an idea of what I mean when I talk about a credit mix. Okay, so I think enough said, right, about payment history. We talked about that last time too, but I just can't stress it enough. Payment history, 35%. So that's a big deal, right? I'm going to move on from that because of my concern. And again, why I'm whipping through this fast is I want to try to get to everything today. Okay, so 30% of the FICO score, the amount of debt that you have. So just a little bit more on that. We're talking about the total amount that's owed across all of your accounts, right? So they look at how much debt does this person have. They look at the amount owed on specific types of accounts, such as revolving or installment accounts, in addition to the overall amount of the debt owed. But one of the things that's factored in is what is owed on the credit card accounts. Okay, so an important point on that, and we talked about this a little bit last time too, but it's one of these little things that if you just have a good understanding of, it'll either boost your score if you understand this and you can implement it, or it can drag your score down without you really knowing it if you don't pay close attention to what I'm about to say. Okay, so we're talking about the amount of debt, and I use specifically the example of a credit card, and I used this example before with simple math. Let's say you have a credit card with a $1,000 limit on the credit card. The credit bureaus look at your revolving credit utilization as in terms of ratios, right? So if you have a $1,000 limit and you charge the card all the way up to $900, they're going to say you used 90% of your available credit and you have only 10% left. That is going to sink your credit score. And you may think, well, I didn't go over my limit and I did pay the minimum amount due every month. Okay, you can do that, but it's not going to boost you. It's not going to help you with your credit if the goal is to raise your credit. If you've got 90% of your available credit already used. So what it's good to be mindful of, if you have $1,000 line of credit, don't have a balance on that card every month when it reports to the credit bureau. Try not to have a balance on there of anything over $300, because that's 30% of your available credit used, right? If you have $1,000 limit and you use 300 of the credit, I'm not saying you can't use more of the credit, but just pay it down so it's less than or no more than 30% at the time that card reports to the credit bureau. You can see if you we'll talk a little bit more about how to boost your credit, but that's one of the things that you can do if you want to try to bump your credit up. Take those cards that are close to being maxed out and pay them down to no more than 30%. Some sources will say even 20%. I even saw one that said 10%, right? Just so you can show that you are not maxing out your available credit. They take that as a plus when evaluating your credit score. So it's a simple thing. You don't have to be like, there's nothing wrong, right? If you have $1,000 limit and you use $900 of it, and let's say the minimum payment is $25 and you pay that $25 right on time, that's all well and good. But if you're looking to boost that score, whatever your score may be, pay it down to less than 30% or less than 20% and see if you don't see a jump in your credit score, because that's been my experience with people that have done that. So be mindful of the amount of debt that you're carrying forward, okay? And again, length of credit history, 15%. What they look at is the age of your oldest account. They look at the average age of all of your accounts, and factor that in, 15% of your score. And I think I talked about that a fair amount already too. So enough said, unless anybody calls with questions on that. The best thing to do is to have long-term good payment history credit. Keep that on your reports as long as you can. If you close those accounts, they may go away whether you want them to or not, right? And then that can hurt your score because it'll make your credit look like it's newer, your credit history look as though it's newer than it is, okay? And again, I apologize. I feel like I'm talking fast, but I'm trying to get to the point where I know last time where we had to stop was right where I am now. So I feel pretty good because I still have time to talk through some of these other points that I would like to make. All right, now we're going to move on and we're going to talk about new credit, which is 10% of your FICO score. FICO scores take into account several factors when considering your amount of new credit, including how many new accounts you've recently opened, or whether you've been rate shopping for a single loan or applying for multiple new credit lines. Opening several new credit accounts in a short period of time is an indication of a greater risk. Okay, let me break that down to explain that a little bit better. Um, so let's say you are shopping for something like a car, and you go to within a relatively short period of time. Okay, this is a little more art than science, right? I can't give you like, oh, within so many days, but in a relatively short period of time, if you go to multiple dealers and you're looking for a car, and maybe they'll run your credit once, twice, a third time. um, you go one Saturday and you're looking at different places, and you have your credit run multiple times, and then you find a car you like, you cut a deal, you buy it, off you go. Because those inquiries into your credit happen close in proximity, they'll understand that you were shopping for a deal and you were looking to get the best rate wherever you could go, and then that makes sense, right? But compare that to if you are at home and you say, I'm going to just start applying for credit cards. And I apply for one credit card and then another and then another and another and another. And I've got all these inquiries out here because I'm trying to get credit at in multiple different credit card companies. Well, then that is a bad reflection, because then they're going to think, here's someone who's in a desperate financial situation. Why do they need all this credit all of a sudden? Why are they applying back to back to back to back to try to get credit established? All of that being said, of course, sometimes there will need to be inquiries with your credit, but generally speaking, as long as you don't have more than 2 to 3 hard inquiries for your credit, it won't tend to lower your score. But if you have multiple inquiries, especially over a period of time, or excuse me, especially in a shorter period of time, then that can and likely will negatively affect your credit score. So be mindful of that. Sometimes you're at the store and you're trying to check out at Kohl's department store or other places, and they want to say, oh, will you apply for a credit card? Well, just understand that if they run your credit, then that can be an inquiry on your credit score, or excuse me, on against your credit. So the bureaus will take note of that. And then if you go to another store, now you're at TJ Maxx, they want to know, hey, can we put you on a credit card? And the same thing there. And you go to some other store and the same thing there. Watch out, because you may be lowering your credit score by all of those inquiries into your credit in a short period of time. Be mindful of that. They don't tell you that, right? When they're asking you to apply, they say, oh, we'll give you 10% off or 20% off. And maybe that's a good deal, maybe it isn't, but evaluate that with the knowledge in mind that if you have too many inquiries against your credit in a short period of time, that's 10% of your score, that it will likely decrease your score. So, yeah, I thought there was one more thought that I had on that, but it is escaping me. So I'm going to move on. Okay, if it comes back to me, I'll say it. But moving on to talk about the credit mix, which is 10% of your FICO score. Again, generally, the credit bureaus and the folks who analyze your credit in order to assign a credit score want to see a mix of credit. They don't want to see that you just have one type of credit. It will boost your score if you have various types of credit. What do I mean by that? I mean that you may have a credit card, right? You may have an installment loan, and then perhaps you also have a mortgage loan. So that's a good credit mix, because those are different types of credit transactions, and that will be more important in your credit report, especially if there's not a lot of other information in there. It is viewed favorably, right, to have a mix of credit on your credit report. Okay, now I would like to, first of all, before I'm going to talk about ways to improve your credit score, but I wanted to tell myself to be mindful to just repeat, since I'm encouraging people to pull your credit report so you know what it is. You've heard me say it before. You can only manage what you measure. Um, you can pull that free report. This is repeating from earlier at www.annualcreditreport.com or by calling 1-877-322-8228. You can request a free copy of your credit report so you can have an opportunity to study it. And I encourage that, sit down with it, read them, go through them. They can be short or they can be multiple pages long. Look at everything that's entered on your credit report and see, because we're going to talk about, a little bit about what you can do if you see something that's not accurate. Maybe there are people that have similar names and, all of that sort of thing. It can happen. But again, free credit report at www.annualcreditreport.com or by calling 1-877-322-8228. And I hope that you take the opportunity to call or go online and pull your credit report so that you'll know what you're working with. You can only fix it if you know what it's saying, okay? Now, we're going to talk about 10 ways you can improve your credit score. All right, number one, and everybody could probably say it with me. I think you know what I'm going to say before it even comes out of my mouth. Number one, pay your bills when they're due. Pay your bills on time, particularly that mortgage payment. Pay it on time. It is so detrimental to your credit score if you don't pay your bills on time. In particular, if you don't pay your mortgage on time, that will drag your credit down quicker than almost anything else that I can think of. But that is a big one, and I cannot underscore that enough. Paying your bills on time is one of the biggest contributors to your overall credit score. So you want to make sure you prioritize paying all of your bills on time all of the time. And if you find that due dates slip your mind, set up calendar reminders, alerts, or even automatic drafts to ensure that your bills get paid in full by their due date. In particular, that's something that could be considered with respect to mortgage payments. What's that saying? Set it and forget it. Where did I get that, Jermaine? I've heard that. I didn't come up with that. Set it and forget it. I don't know, but anyway, put your mortgage payment on an automatic draft if you're able to do that. Okay, number two, to improve your credit score, because again, these are things that if you do this and study, be a student of your credit, right, and know what it is, write it down, study it, come back and look at it. If you do these things, you implement these things, and then circle back to your credit in 2 or 3 months and see if the score hasn't gone up. So that way you can test out the recommendations, the information that I'm providing today. Okay, number two, keep your credit card balances low. And again, we talked about that. If you're close to maxing out your credit limit on any account, it will negatively impact your credit score. A good rule of thumb is to keep your credit utilization ratio below 30%. Sometimes they say make it below 20%. And I told you I've even seen 10%. But you got to live, right? So sometimes you may need to spend a little more. But even if you go over the 30% ratio during that month, you can contact your credit card company and you can ask them, what day of the month do you report to the credit bureau? And they can tell you. So let's say they report to the credit bureau by the 20th of every month. Then I would say if you need to use that credit heavier in the first 3 weeks of that month, make sure you pay it down to less than 30% by the 20th, if that is the report date. So I randomly picked an arbitrary date. I'm not saying the 20th is when everybody's credit reports, but you can call your own personal credit card company and ask them, when do you report to the credit bureaus? They'll give you a date, and then you make sure that you pay your credit card bill down to less than 30% of your available credit on or by that, I would say before, quite honestly, that date that they report, so that you don't miss out. Okay, I hope that makes sense. Number 3, check for errors. Again, you got to pull that report in order to check for errors. You can't check for errors if you don't pull the report. You may see inaccurate information on your credit report, but it can be fixed because the thing about it is there are laws that protect consumers. Federal laws protect consumers with respect to the credit reports, and it is required that the information that the credit bureaus provide is 100% accurate. So if you find a mistake, if you find something that's wrong, if you are John Doe Jr. and John Doe Sr. is your father, and maybe the father didn't pay some bills on time and it's dinging against the son's credit, there's a way to get that cleared up by providing social security numbers or whatever they need to distinguish between people who may have the same name, that sometimes have the same address, or even if they don't currently have the same address, maybe at one point in time had the same address. I've seen that happen, and you'd be surprised at how often it occurs when there are actual errors on the credit reports because they've got some names mixed up. Okay. So you can, and I should say this too, just so we could talk. Well, this could be its own show, really, but even just talking about how do you reach out to a credit card company if you believe there is an error. If you pull your credit report, there should be contact information on there for the actual credit bureau. Now, a lot of times people will like to go online and file something that says, oh, I contest this or that on my report. And you can certainly do that. And that makes sense in this day and age to want to go online and request these corrections. But in my experience, it's good, if not better, to go old school and write them a letter, because if you write them a letter and you keep a copy of it, send it certified mail requesting that return receipt, and then you save all of that for your records, the clock starts ticking once they receive your request, and they've got to evaluate it and they've got to make the correction. I believe it's in 30 days time. I'd have to double check the time frame on that, but there is a clock on it, right? And they can't deny that they received your request because you send it certified mail, and they've got a sign for that when it comes. So I have just found over the years that has been a helpful way to keep them on their toes, to keep them honest. If you see something, I've given people this recommendation, go ahead and write them a letter, send it certified mail, a return receipt requested, and ask them to make whatever the correction is that needs to be made on your report. And that's a good way to keep them on their toes. Okay. Number 4, make a plan for how you're going to pay down debt, because I did mention that one of the things that they look at is how much debt do you have. If you have too much debt, it's going to hurt your credit score. So moving around your debt across credit accounts won't help you improve your score. Sometimes people do that. Oh, I'll transfer this debt over to that card and this one here and there. No, the best course of action is to create a realistic plan. You can even go online now and pull up budgets, right? You can enter your information in and it'll help you budget the money that you make against the bills that you need to pay. So your best course of action is to create a realistic plan to pay down your debt, whether it's credit card debt or whatnot. Just see what works out best for you in terms of making a plan to pay down your debt. Whatever works best for you, as long as you do it, that's the way to go. Number 5 is to keep using your credit. Keep using it, just do it responsibly. And that means, use it, but don't max it out. Make sure you pay the bills on time, in a timely manner. All right, as fast as I'm talking, I'm going to talk even faster when we come back from the break, because I still have at least 5 more points that I want to share that will help you to improve your credit. Thank you so much. This is Money Talks with Attorney Coral. We'll be right back from the break. for improving your credit. Left off on number 6. Um, so my recommendation there is don't open multiple credit accounts in a short period of time. And again, that's something that we talked about a little bit earlier in the show. If you take on a lot of potential debt at once, your credit will look too risky to lenders. Plus, the average age of your accounts will be considerably young, which can also negatively impact your credit score. And we talked about that a little bit too. You don't want a bunch of new accounts because they're all going to be new. So they may give some consideration to the oldest account that you have, but then they also basically average them together. So the newer accounts are going to bring down that average age from the old accounts. Okay. Number 7, don't close credit card accounts. Or if you are going to do that, just make sure you talk to a qualified credit counselor. I've shared with you my experience, my personal experience in closing an account that was actually in a good account that was paid well and paid on time, but I closed it, and then over time, one of the 3 bureaus, it was TransUnion, dropped it from my credit. Well, then I lose that long history of having had that account paid in a timely manner. Sometimes people think that if you pay off or have a zero balance on a credit account, it's best to close that account altogether, but that can actually hurt your score based on the example that I gave. Number 8, shop for a loan within a focused period of time. So again, when you're shopping for loans, they may run your credit report or run your credit score to get your credit score. So that is considered an inquiry, a hard inquiry. That's what I was going to say earlier when I lost my train of thought. There's such a thing as a soft credit inquiry, and you don't have to worry about those because they won't affect your score. So sometimes if you're in a situation, let's say, for instance, here's one where I know I've seen it happen when you are applying for car insurance, right? Sometimes they'll want to do what they call a soft inquiry, but just confirm with the person that's trying to run your credit for car insurance that it will be a soft inquiry, because soft inquiries don't hurt your credit score. Hard inquiries is when you're going to borrow money or take on some or other sort of debt. A soft inquiry for something such as an insurance inquiry, that shouldn't hurt your score. But okay, shopping for a loan within a focused period of time. Why? Because every time you have your credit run, it's a ding against your credit score. Okay, that can lower your score. Too many inquiries within a short period of time. Number 9, limit credit applications. Be smart about opening new accounts. Otherwise, you may end up with more than you can manage and your score will take a hit. Number 10, automate your payments. Again, that's something that we talked about during the general segment, but I just identified that as a very important thing to do because it will show that you're paying on time every month. You won't have a late payment history or missed payment history to try to come back from, because usually if there are missed payments or a slow payment history, that can count against you for a good 24 months, sometimes more. But they'll look that far back sometimes to see whether there was ever a missed payment or even a late payment. So automate your payments as best you can. You don't have to worry about that. I got a couple of bonuses. I know I said 10. Number 11, diversify your credit mix. And number 12, consult a credit counselor. Avoid scams because there are people out there that are scamming. We don't want that. Okay, real fast. Said a lot of words today. I just want to say that if there's anyone that knows of an accountant or a credit administrator that's looking for employment, you can send me a resume for the bank. My email is cpleas@columbiasla.com. That is C like in please, LEAS like in Sunday at columbiasla.com. Email me your resume if you've got those types of qualifications, background, and don't forget to call the bank at 414-374-0486 to reserve your ticket for the centennial anniversary taking place at the Trade on October 24th, 2024 at 6 p.m. You can also email us at centennial@columbiasla.com. Shout out to Danielle, Yumika, Kayla, Angie, and Kelly, who are my two paralegals that are helping stuffing envelopes at the bank today in order to get these invites out. Thank you so much and look forward to seeing everybody next week.
You're listening to Milwaukee's first Black radio station, serving our community for nearly 60 years. WNOV The Voice, 860.